These are your real estate numbers for January. Technically they're February, but they cover till the end of January here for Central Florida. And man, things are starting to change. We're getting some inventory. Is there going to be any price correction? Is it going to be a more softer market where it might be easier to buy a home? I'm an investor. I'm always looking for any type of market shifts. Hey everyone, it's Rayce Robinson, your favorite Florida mortgage broker. And let's take a look. Let's look at the data and see what it's saying about 2024. I really like looking at data this time of the year because it shows me how the year's starting and also an indication of how it might go. So look at this. In January of 2023, we had 6,115 homes on the market. We are up 34%, 8,217 homes. That is a fairly decent increase over last year. From December of last year to this month, basically 1 month, we're up 4.8%. You can see across the board, look at the new listings jump, 46%. 2,400 people listed their homes in December. That went up to 3,500. That is also substantial. At the same time, closed sales really staying about the same. 1,674 in January of last year, 1,719 January of this year. And then from last month to January, sales are down. Now that's pretty normal. January and February are slower months. I would expect actual closings to go down and then start to trickle up as we get through March, April, and the summer. That's when we're going to get more of your transactions. Days on market, not really changing that much. And months of supply at 4.78 months, up from 3.65 months last year. And months of supply is something I really like to look at because it gives you kind of where the market's at. 4 to 6 months, closer to 6 is considered balanced. Anything over 6, that's in favor of buyers. Anything under 4, 3 starts getting more in favor of sellers. And then I like to look at what I call kind of the health of the market. And you can see right here that 22 distressed homes up 70%, 69.2%. You may say, man, everyone's going into foreclosure. But no, 22 distressed homes is really almost nothing. If you have $1 and I give you $3 and now you have $4, that's a huge increase. But you're still not going to buy that much for $4. And 22 houses in foreclosure is not much of a distressed market. And it's just because sellers have so much equity with all the appreciation. So no issues with foreclosures. And then I want to look just here, kind of run down the numbers and give you my thoughts. Rates 6.5% in January, though they've shot up a lot recently. We're going to look at that. 8,217 single family homes 8,217 total homes on the market. Single family homes 5,772. Condos 1,546. Townhomes 899. And these are the numbers I really like looking at. Closed sales 1,719. Days on market 57. And so you can get a feel for kind of those numbers where we're getting a little more inventory. Rates were falling. Sales have been low because of interest rates. And this is kind of where we're at as far as interest rates go. This is Mortgage News Daily, and I like to look at this. Now, everyone's rate's different. Everyone's credit's different, but this just gives you a barometer of what the market's doing. And if we look here on a 30-year fixed chart, look at how we went from almost 8% all the way down to almost 6.5%, went back up to almost 7%, went back down to almost 6.5%, and then all the way back really over 7%. So the interest rates have been all over. That's because the CPI and some of those numbers came out hotter on inflation. But the market's still predicting rates to be a fair amount lower by the end of the year. And some interesting articles that I thought were for our market here. This is talking about Austin and San Antonio boast appropriately supplied lot inventory, but LA and Orlando face significantly undersupplied conditions. And they have this chart where they figure out if a market's undersupplied, meaning for new homes to come out of the ground, are they going to be undersupplied? And you can see higher numbers better. When you look down at the bottom, Orlando is way at the bottom, meaning there's just not a lot of new lots coming online for builders to build homes. At the same time, when we look at what's expected for appreciation by all the big companies, I got this chart here. Everyone predicting 5.5% appreciation down to 1.4%. A couple people predicting a little bit of decline, 1.7%. But the consensus is rates are appreciation will go up. So what does that mean here in Central Florida? One, if you look at our market, we are undersupplied. We do have inventory that came into the market because rates had shot up. when rates go lower, with all the new incentives coming out for first-time home buyers, that inventory is going to get soaked up really quickly. And we'll see how this ages over time. But I expect this summer to see inventory fall, us to get more in a seller's market, and to have the competition go up. Which I don't think it's going to be like it was a couple years ago where there's, everyone paying way overpriced value and all these things, but there's going to be a pretty good market this summer. So if you've thought about selling a home, it's going to be a good time. If you've thought about buying a home, it's going to be a good time too, especially right now where there's a little more inventory, and I think that inventory will start getting soaked up. So really pay attention to the numbers from here. Right now we have almost 5 months of inventory. It's just closer to between 4 and 5 months. We'll see if that goes down. I expect that to get back down to 3 months of inventory as we get closer to the summer. We shall see. I'm expecting interest rates to go from 7, potentially all the way to 6% by the end of the year. That's what a lot of the forecasts say, which will create more competition and unfortunately more appreciation. If you own a home, that's great. If you're looking to buy, that means buy now, don't wait. You can always take a little higher rate and refinance later, but you want to buy when there's less competition. So market's super healthy. If you own a home, that's great news. Continuing to go up, really not a lot of foreclosures, and in general the market forecast always at this point looking really, really good. So that's what I got for now. We'll look next month. I really expect February to be very similar to January. I expect rates to trickle down maybe in March or April, and then we'll see how that plays out in the summer month. Now if you've ever thought about refinancing, now's the time to at least start having someone look at it. I still think there's some room to run in the market for rates as we get through the summer. I think there's going to be a golden opportunity to refinance as we get in the summer or more towards the end of the year. We'll just have to see what Jerome Powell and the Fed does. But a good opportunity if you bought when rates were a little higher to take those down. And if you're sitting on a lot of equity, to maybe do a cash out refinance for an addition or pay off debt. We're doing a lot of that right now. Anyways, this is Rayce Robinson, your favorite Florida mortgage broker. You're looking to buy a home, reach out to me. I'd love to help. Refinancing, any questions on the real estate market or lending, I'm here anytime. Anyways, have a great day, great week, and I'll talk to you soon. Bye-bye.